The current picture for XRP is mixed. In late August 2025, XRP is trading around $2.85, $2.90. Below the $3 mark, it briefly cleared in July. Technically, this is a short-term bearish signal. The price has broken under its 50-day moving average and fallen into a descending triangle pattern. In fact, crypto analysts note that a recent daily candle closed just under the psychological $3 level, extending a roughly 2-week sell-off. Momentum indicators have turned negative, with an RSI in oversold territory and a drop in trading volume as holders take profits. As trading news reports, whale wallets holding 10 to 100 MXRP have dumped roughly 460 million tokens in the past week, driving XRP down by over 13% in 6 trading days. This wave of profit-taking, when combined with the fact that about 93% of XRP's circulating supply is currently in profit, is a familiar red flag. Historically, such overbought conditions have preceded deep corrections in XRP, 85 to 95%. Drawdowns in past cycles. Yet, despite these near-term headwinds, a longer-range breakout remains possible. Technical analysts have identified a repeating fractal in XRP's price action. The current daily chart pattern resembles one from earlier in 2025. In January 2025, for example, XRP jumped from around $1.60 to $3.40 before correcting. Back then, the low formed after price hit a fair value gap and imbalance zone between $1.60 and $1.70. A similar setup is unfolding now. The chart shows an unfilled fair value gap roughly between $2.32 and $2.66. If price dips into and fills that gap, many analysts believe it could mark the end of the pullback and the start of a renewed bull run. Indeed, Cointelegraph summarizes that this recurring fractal pattern hints at a bullish Q4. If XRP finds support near $2.30, $2.65, and then breaks higher, it could rally back toward $4.35 or even $4.85. In practical terms, this implies roughly a 60 to 85% gain from current levels. Crucially, the analysts point out that $3.85 is a key inflection. Clearing that point would push XRP into price discovery and could open the door to much higher levels. On the on-chain side, the picture is similarly mixed. Large XRP holders, often called whales, have indeed been selling recently. But this may be a late-stage distribution rather than a sustained dump. CryptoQuant data via Cointelegraph shows whale net flows peaking, suggesting selling pressure is becoming exhausted. Supporting that, sentiment data noted in Brave New Coin indicates whales 10100 M addresses sold about 470 meters XRP in 1 week, even as mid-sized holders 110 M addresses picked up roughly 130 M during the same period. In other words, while some big players are trimming positions before Powell's Jackson Hole speech, others are quietly accumulating. This echoes what happened in late 2024. Whales built up positions between $2 and $2.50, ahead of XRP's rally. In fact, both Cointelegraph and the Economic Times note that such accumulation zones, roughly $2.33, $2.65, now are where large buyers may step back in. History suggests that heavy profit-taking by big holders often flips into reaccumulation once the panic subsides. Ironically, long-term investors view sub-$3 levels as a buying opportunity. To quote one XRP advocate, the macro environment adds another dimension. Any expectation of U.S. Federal Reserve rate cuts this fall would likely boost crypto broadly, and XRP specifically. Cointelegraph explicitly notes that supportive macro factors like potential U.S. interest rate cuts could help XRP sustain momentum into Q4. On the other hand, hawkish Fed policy is a clear short-term risk. Analysts warn that if Powell maintains a tight monetary stance, XRP, like other cryptocurrencies, could drop toward the mid-$2 range. Indeed, in the run-up to major Fed announcements, XRP's volatility rises. For example, Trading News observed that during one recent session, an 18% surge in volume accompanied a 5.5% XRP decline as markets reacted to macro data. In short, a pivot in Fed policy could be the catalyst for either a relief rally toward $3.253.50 or a deeper slide back toward $2.60. In the thick of this debate are several key price levels. Near-term support is seen around $3, $3.10. Analysts describe this zone as the battleground, if XRP can hold it. A rebound toward $3.20, $3.35 would likely follow. Breaking above that resistance zone opens a bigger rally. One chartist, Peter Brandt, even argues that clearing above $3.35 could unleash a approximately 60% rally all the way to about $4.47. On the downside, defending the $2.80, $2.85 area is crucial. Multiple sources warn that a break below here could trigger a liquidity sweep into the mid $2 as trading news notes that if sellers drive XRP through $2.80, it could quickly fall into the $2.74, $2.63 zone, which is a major historical accumulation shelf. Similarly, the Economic Times writes that failing $3 could cascade to tilde, $2.70, or even tilde, $2.50. In fact, one scenario chart shows that a breach of tilde, $2.85 may open the door to around $2.63. In summary, the path to a Q for breakout requires absorbing short-term selling at these floors. If those levels fail, the near-term trend could remain decisively down. Looking beyond the short term, fundamentals and broader catalysts provide some reason for optimism. Ripple's victory in the SEC lawsuit last year removed a major overhang, reopening U.S. markets to institutional participation. Trading news reminds us that this legal clarity shifts the narrative onto adoption. Analysts are now imagining fair value ranges of $4 for $1.50 with a bull case to tilde, $6.50 based on renewed inflows. In parallel, Ripple's enterprise growth ODL, corridors, CBDC partnerships could underpin higher price models. For the longer term, even mainstream financial commentators have floated double-digit targets by 2026 to 27 if XRP's utility keeps growing. At the very least, most bullish models suggest a multi-dollar XRP in a few years. For example, one projection sees tilde $5, $7 by 2026 if XRP holds above $3.00 and breaks $3.50. Of course, there are also bearish factors to weigh. As noted, the current heavy profit-taking means a lot of supply is still eager to sell into strength. Trading news emphasizes that with 93% of XRP holders in the green, history points to further corrections as investors cash in. Inflows into exchanges have ticked positive again, about $2 million recently, suggesting some holders are moving coins to sell. Competition within crypto is heating up too. Trading news even highlights several new remittance-focused tokens gaining speculative hype, which could siphon attention from XRP. Fundamentally, some skeptics argue that without a clear catalyst, chasing high targets is pure speculation. Indeed, sentiment polls on social media show division. While some traders tout a dive buyer approach, calling sub $3 a blessing, others dismiss lofty price forecasts as unrealistic without a major bull run. In practice, the near-term price action will likely hinge on how quickly the market digests these opposing forces. If XRP bounces from this correction as the fractal pattern suggests, we could see a fast recovery in September, just as July saw a sharp rebound from $2.70 up to tilde $3.66. Such a bounce would likely coincide with whales flipping from selling to buying. Already, on-chain data shows whale net flows peaking, implying that large holders may stop selling at any moment. Should that shift occur, the fill of the $2.32, $2.66 gap would be complete, setting the stage for an expansion phase into Q4. At that point, momentum could carry XRP above last highs. One optimistic scenario targets the mid-$4s, around $4.35 for $1.85 by year-end. On the flip side, if the bears remain in control, we might see more pain before any real breakout. A failure to reclaim $3 quickly could lead to more stop-loss cascades. Technical analysis warns that a drop below $2.80 could accelerate selling, potentially dragging XRP toward the $2.60 region in short order. In that case, the narrative would focus on whether these levels hold as a final accumulation zone. The coming weeks are thus crucial. Macro events, Fed speeches, or new data, and on-chain signals whale behavior will likely dictate which way the pendulum swings. In summary, XRP's story right now is one of contrasts. Short-term indicators and recent price action skew bearish, pointing to ongoing volatility and risk of lower lows. But medium-term technical patterns, the repeating fractal and identified support zones, and fundamental tailwinds, regulatory clearance, possible rate cuts argued that this dip could be the last before a major rally, as one analyst puts it. XRP sits on a knife's edge. Holding critical support around $3 would preserve bullish momentum for a rebound, while a breakdown would hand control to the bears. Traders and investors should therefore watch the $2.80, $3.10 area closely. If XRP can stabilize there and absorb selling, the path toward new highs in Q4 remains open. In any event, given the mixed signals, the prudent stance is cautious optimism, recognizing both the genuine upside potential and the clear downside risks as Q4 approaches.